Dr.
Briefly.
Jorgensen picked the lowest year in history almost, in 1998. If anybody here remembers that, is when our friends from Venezuela was dumping oil into America, trying to put all the stripper producers, particularly, and high-cost producers of America, out of business. Prices before that had been in $20 range, twice that. After that, you know, they responded and came back to that after that procedure was changed and the administration was changed in Venezuela. So that's how that happened. When the Bakken began up there in early 2000, the price of oil was about $25 a barrel. So yes, we've seen prices spike at $147 for one day, and then they came back. So right now we're in about an $80 price range, close to that. We're about $15 under Brent's price, which is considered to be world price here in the Midwest. So prices go up and they go down.
Thank you, Mr. Ham. Senator Coburn.
Thank you, Mr. Chairman, and thank the individuals testifying. I'm having trouble getting this. Senator Enzi and I are the only two accountants on this committee, and the thing I can't figure out is the obvious is not being seen. You eliminate intangible drilling costs, actually you decrease revenue to the federal government, and here's why. You take away the capital for exploration, you thereby decrease the amount of revenues and the exploration in this country. If you had no change in exploration and no change in discoveries, the tax revenue to the federal government would be the same over 10 years as it is with intangible drilling costs. There's no difference to what the government takes in. One is a delayed tax versus a fully captured tax at the time of expensing. So I don't get what the debate is. What I don't understand is why, when we're sending $400 billion a year out of this country, and we have the potential to have a stimulus in this country of $400 billion a year by having the money that would have been sent out spent here, tax-free, not borrowed to create a stimulus, totally tax-free, and energy independence for our country, why wouldn't we do everything we can to do that? Still within the parameters that Dr. Jorgensen set out in terms of a clean environment. I don't get it. We have the opportunity of a lifetime in this country to reinvigorate this country in terms of natural gas and propane and ethane. We're building new cracking plants. Conoco's going to do another one. They're employing 10,000 people in Texas right now to build a big cracking plant. It's going to put us at a major advantage over everybody in the world in terms of raw materials for almost everything that's made in this country, from plastics to chemicals to you name it. We have an opportunity to expand our dominance in the world as manufacturers on the basis of what has happened in oil and gas exploration. And when we talk so foolishly about short, little bitty things, not looking at the big picture, I have trouble understanding that. There's no question there will be no increase in revenue to the federal government by eliminating intangible drilling costs. No net revenue increase to the federal government because you're going to shut down a third of the exploration. And by the way, they just pay out $100 billion a year. The oil and gas industry is the largest payer to the federal government in terms of taxes that there is today. They pay on average 9% more against earnings than any other industry in the country. And now we're talking about lessening that. But more importantly, we're talking about stealing the one thing that can renew America's dominance in terms of productivity and in terms of manufacturing edge. What has happened in the oil and gas industry is giving us an opportunity to regain our mojo. We must be very careful in how we approach this. Amortization is something that my colleagues need to learn about. What it means in terms of the accounting rule. Under generally accepted accounting principles, we amortize expenses. What we have done with intangible drilling costs have said, we're not going to amortize those. We're going to allow those to be written off, just like we did with 100% write-off that we gave in terms of new investments this last year. And what has come about from that? What has come about from that is a tremendous increase in jobs, but more importantly, a dynamite opportunity for this country to get back to where it was 20 years ago in terms of leading the world in terms of production, innovation, and efficiency. We should be careful. I have one question for Dr. Jorgensen. If we had $400 billion in stimulus every year coming into this country that was not borrowed money and not directed by the federal government, but was in the market, what would be the net effect to our economy?
Senator Coburn, you're going to be very surprised to hear this answer because I'm going to agree with everything you said. This is not a debate about tax expenditures. That is second order. Let's get the big picture in mind. We're not talking about big revenue here. These expenditures have been limited for years to the independents. That's what Mr. Ham discussed with us in his written testimony. So I think we are all on the same page here. What we're not apparently on the same page about is essentially what the price system is doing for the energy sector. You're an accountant, or were, Mr. Coburn, and you know that when you evaluate a project for a client like Mr. Ham, if you ever had such an outstanding person as your client, I would simply say, if you ignore the price of energy, if you ignore the dynamism of our economy and the energy independence that's going to result from the new structure of oil prices in the world economy, you're fired. You're no longer Mr. Ham's accountant if he's done project analysis ignoring energy prices. And that's what we need to absorb. Our market-based economy is working. It's working toward energy independence, and it's working toward a more effective allocation of energy resources toward the domestic sector, which you've emphasized in your question, Senator Coburn.
Well, I'd just say is if the chairman would allow me, we have the opportunity to see oil prices go down if we become totally independent of outside resources, which gives us another boost in terms of our productive capacity.
Thank you, Senator. Senator Menendez.
Thank you, Mr. Chairman. Thank you, gentlemen, for your testimony. Senator Nichols, you know, as we look at all of these different provisions and think about what is the right tax policy, I look at the big five oil companies, and from my perspective, they are avoiding U.S. taxes by disguising what we would do here in the United States, which is a royalty payment, and instead of having a foreign royalty payment, having those countries charge them a tax. And in doing so, it allows them to write off these foreign taxes as a tax credit in the United States, and in turn, in my view, shortchanges the American Treasury and the American taxpayer. Why should the American taxpayer be in the business of subsidizing foreign oil exploration? Why shouldn't we close this enormous loophole as we have seen the Senate vote, a majority of the Senate vote, to force these giant oil companies to pay what they owe?
Senator, there it is. Senator Menendez, I couldn't disagree with you more.
I'm not surprised, but I still want to hear your rationale. So,
well, I do. You're talking about dual capacity. You're talking about the ability to be able to deduct overseas taxes against the tax amount paid. I think if your proposal was successful, we wouldn't have international oil companies based in the United States. You would give such a tax advantage to Total, BP, Lukoil, other international oil companies who wouldn't be facing this tax penalty. Double tax would be the result of your proposal, in my opinion, that they wouldn't have to be headquartered here. I'm speaking for myself, not for anybody I work with, but tax policy has consequences. Windfall profits tax had consequences. This would have tax consequences. You'd put us at such a competitive disadvantage internationally that the growth in international exploration wouldn't be done by U.S. companies. It would.
But you wouldn't deny that, in essence, what is happening here is that the same company in the United States to drill in federal lands or water would pay a royalty. And in essence, they're paying a royalty. The only thing, they're disguising that royalty as a tax.
Oh, I wouldn't agree with that characterization one iota. Treasury has worked, IRS has worked for years with companies to figure out the complicated, and they are complicated, I will grant you that. I'm going to say allocations. Are you talking about royalties? You're talking about taxes? You're talking about all kinds of fees. We have all kinds of fees as well. And trying to come up with a system that works. I think they have done that over years and years and years. But I think if you're not careful, you could have a lot of unintended.
Well, I'd be happy to get involved in talking about how we tax all U.S. companies' foreign income. I think that would be great. But what you criticized in your testimony that I read is the administration's attempts to force the Big Five oil companies to play by the current rules that all other U.S. companies play by. No, it seems to me that no matter how wealthy or powerful the company, they should pay their fair share. The reality is that the Big Five will make $1 trillion in profits over the next decade. I think the marketplace, I think Mr. Ham said in his testimony that I think he rightfully points out that oil subsidies going to the Big Five oil companies are, quote, not providing the capital that is fueling America's march to energy independence. I agree on that view. The reality is the marketplace has dictated that they will make more than enough money to continue to pursue their exploration, whether here or abroad. Doesn't seem to me that they need $24 billion of our collective money as taxpayers when they'll make $1 trillion in profits, not proceeds, over the next decade. I don't think they're going to deter their march towards oil exploration if they lose those $24 billion over the next decade.
One, I don't think it's a subsidy. Two, I think they should be treated fairly. And three, if you tax U.S. domiciled international companies punitively compared to other international companies, those other international companies will win in the leasing, the bidding. The competition is fierce all around the world, and you'll have less jobs in the United States, and the U.S. headquartered companies will become smaller, and the other non-U.S. companies will become much bigger. And I think that would be a terrible result.
It's hard to believe that $1 trillion in profit isn't enough for you to pursue, a company to pursue their own interests. One final question. You seem to be, from all the testimony I read, and someone can correct me if I'm mistaken on that, the one witness who is willing to defend the fact that the Big Five oil companies receive the domestic manufacturing tax deduction. I can see how some might consider oil refining to be manufacturing, but other than a hole in the ground, do oil drillers actually manufacture?
Well, one, I don't defend 199, period. I think Congress, when you're rewriting the tax code, you should have a uniform corporate rate, not a lower rate for manufacturing. Some companies do both. Some are manufacture, some are service. But to single out 5 companies and say, we're going to have a lower manufacturing rate except for you, I think is absurd. Congress shouldn't be picking winners or punitively picking losers and saying, we're going to give a lower rate for everybody but you. You're too big. That's just bad tax policy.
Well, I agree. I'll close, Mr. Chairman. Look, other than sometimes we do want to incentivize an effort. Manufacturing may be one of them. I just don't understand how extracting oil from the ground is manufacturing, because that would make everybody who owns a well with water a water company that should be subject to getting the same deduction. I don't think it makes the type of tax policy we'd like. But I thank you for your answers.
Thank you, Senator. Before I turn to Senator Wyden, just one observation, like it's all to consider. 199 was enacted, as we all know, to replace something called the FISC-ETI. FISC-ETI was in the law to counter the advantage that VAT countries had. The VAT, say, a European country had, was rebated back to the company. They gave them a subsidy for exports. So VAT countries had an export